What's up, guys? This is Tyler with Division One Trading. This is the free Forex YouTube course. Go ahead and read the disclaimer if you haven't already. So today we're going to be going over the Fibonacci. So this one should be pretty short, not too complicated, right? So the Fibonacci tool is nothing more than a ruler. That's how I think about it in my head, right? It's simply used for measurement purposes, and it does not work like an indicator, right? It's really just a measurement of price. So whenever we draw the fib, it's typically with a breaker structure, and we'll cover that, right? So say we have, let me make this different color. Right, say we have structure here, and then we have a break in structure, right? Once we have that break in structure, now we can use the fib measurement, and we're going to be measuring the push of that break in structure, right? And then we're anticipating a pullback to a certain level and then a push, right? So the fib, the way you could think about it is it's just 0 to 100%. Right, and the main levels, or the main level that I look at is right in the middle, the 50%, right? And then for targets, we look for the 62 all the way up to the 88. And so we use this to measure a move. Like I said, this would be the high. If it was a down push, right, this would be the low. The price was here, moved to here. Then we would be expecting a return up into that 62 to 82 and then a sell-off. So right here's that fib, 0 to 100 with the 50 right in the middle. Then here we add the 62 to 88. Right, so we're trying to measure a pip with the fib tool. It's just a dad joke there, right? Just a push in price, right? I know that that's not what pip means, but right. So kind of like I was just talking about, when we have a market structure like this with a push in price, right? We need to figure out, okay, how can we trade this, right? So we'll take that last push and we measure it with the fib tool. We're looking for that 50 to 62, right? When it trades to it, we're looking to be a buyer. So we're going to talk about the first trade using the fib, right? And it's going to be this setup here. Basically, you're looking for a push in the market, some level of push, and then retracement, right? And then we're looking to buy in here and then exit here with our stop at least here or lower. So we call this the A-B trade. It's also called the straightaway trade. I call it the A-B trade because you're just moving from point A to point B. And then, right, that's how we identify it. But if you go to like TradingView and you go to tools, if you click on ABCD pattern, you'll see ABCD pattern, excuse me, just means right from A to B, right? That's what we're identifying as the push. And then C is the retracement. And then D is what puts us into profit. So if you draw an ABCD leg, that's what it'll look like. So we just call it an AB trade. So for the straightaway trade or the AB trade, we're just looking for a push, and this is important with all bullish or bearish candles in a row, right? We can let, if there's one or two, right, we can leave those out. But if there's a handful of them, especially 2 or 3 in a row, opposite colored candles from the ones we're using, then it's a no-go, right? And this is only after a break in market structure, right? We have to be trading in that direction of the market structure. We then expect a retracement into the fib. So we're going to go through some charts real quick and just talk about some fib trades. And so fibs can be complicated because a lot of the time a fib is almost forcing you to chase price. because you're going with the flow, or you're going with the market structure. So obviously, if you're in a trending market, fibs are going to be extremely beneficial, right? So, for example, if we are seeing that we're at the end of 3 bullish days. Right, let me pull this up here. This is a pair that's a little, I've been trading a little smoother at least. So, right, say that we had, right, excuse me, like right here where we're trading up these bullish days, these are areas where that trade is going to work well. So like right here, we have a push, a large push here. This level breaks market structure. See that? So we break all this structure here, 2 levels of structure actually. So where did the move start? Well, it started right here. Okay, so that's where we draw our fib. We draw it all the way to the top of that move. Goes to the top, comes back, right there, that 62, that's a buy. So then goes up, clears out the buy. This is still valid. So, and that's one thing I want to talk about is we call this picking up the change, where we just, it's this same fib trade, right? We really haven't taken it out or really put it in too much trouble. And we can just expand it here, right? And then we get those same levels, right? And again, we're looking to buy anything in between here, right? So it pretty much lays it out perfectly. And then this is really the, this is where we expect the quick movement to happen. And then it trades away. Right, so now once we've gone up here, that's 3 days bullish. Once we break trend back bearish, then now we know that, hey, when we see a straightaway trade, so for example, here's a smaller one right here, how do we know to take it bearish? Because we just talked about it. We just had 3 bullish days. We've broke structure to the downside, right? We don't just want to take every single straightaway trade, right? Like that. Because this day we have to wait for this day to break structure. Wait for this area, and then we look at the structure here. So we break it there. That leg break structure, we can begin looking for a fib trade. If you take this one and get stopped out, don't worry, because when it trades back down, you can look to take that, and it just, that one leaves. Runs off a little bit too quick. Let's look back a couple more. Yeah, this one has been tough. So, for example, this high to low, you can see market structure goes up and breaks back down. So we could take a fib of that whole move, really. Because look, this day, the 30th, here on the 1 hour, you can see is just a straightaway trade. See that, how I was saying we could ignore if we just have one green candle? But right there, you see it's all, pretty much all red candles going down except for that one there, and it's real small. The body's real small. That would be another example. And again, we'd be looking to sell everything that comes into here. And then let's see, let's talk about one more. And again, this was that same setup, right? Bullish days, 3 bullish days, and then break structure. Okay, so we can take a fib now. Right, so vice versa. 1, 2, 3 bearish days. This day breaks structure. So now over here we can look for that straightaway. So we'd be looking about here. See that we pick up the change here, and we're looking to buy everything here, and you can see it goes all the way down, tags that level, and then goes all the way up, and then rips all the way back down. So nothing you can do about that. The opportunity was there and the trade was there, and that's just one of the ways that I use fibs. Let me know if you guys have any questions in the comments about this one. I know this one can be a little more confusing. Thanks, guys.